Hey everyone and welcome back to CryptoScores.com. Today we are looking at the TVL over market cap ratio. This one takes the total value locked we just covered in a previous video, by the way, and puts it in perspective by dividing it by the project's market cap. The result, a clear measure of how strong DeFi adoption really is relative to the project's valuation. So what does this ratio tell you? A project can have a huge TVL, but if its market cap is 10 times bigger, the DeFi adoption is actually modest relative to its size. On the other hand, a project with a smaller market cap but a massive TVL means people are actively locking their money assets into its protocols. That's real trust, real usage. And just like with other metrics, CryptoScores use color code. No colors means healthy, normal adoption. Green means the TVL is exceptionally high compared to the market cap. DeFi adoption is very strong, but red means the locked value is low relative to the project size, a potential sign of weak protocol usage. So let's get back with Solana, and on liquidity score you can check the total value locked, but if you scroll down a little bit you can see the TVL over market cap. And here it's about 29.06%, so no special color, just normal. About a third of Solana's market cap is locked in DeFi protocols. That's solid, balanced. It shows there is real usage, real capital deployed in the ecosystem, but nothing extreme in either direction. Just healthy. If we check AVI for another example with a big TVL, $25 billion, and we can see that there is some green over there. The ratio is over 1,470%. Green, very green, and that number might seem crazy at first. How can the TVL be almost 15 times the market cap? But it makes perfect sense actually, because when you understand what Avi is, it's a lending and borrowing protocol. Its entire purpose is to hold other people's assets. So TVL isn't just Avi tokens, it's ETH, stablecoins, and dozens of other assets that users have deposited into the protocol. So a ratio this high on a project like Avi isn't a red flag at all. It's actually the ultimate proof that the protocol works. People are trusting it with billions of dollars of their own money. That green color is telling you this project has massive real-world DeFi adoption relative to its own valuation. So now for the third example, let's take Injective. With a TVL of only $22 million, we can see that there is some red, because the ratio is only to 7.23%. That means only a small fraction of the project's valuation is actually backed by locked assets in DeFi. This market cap says one thing, but the protocol usage says another. Combined with what we saw in a previous video, the TVL has been divided by 5 over the past year in Injective. On Injective, the picture becomes clearer. Not only the absolute TVL is dropping, but even relative to the market cap, the DeFi adoption is weak. That's a double signal worth paying attention to. And if you want to go deeper, as always, CryptoScores gives you a direct link to DeFi Llama to check by yourself. You just have to click on it here and you go to DeFi Llama to check, of course, the protocol information. Use this ratio as a quick filter to gauge real DeFi adoption. You can go to the dashboard, get to the filter, and sort all the projects by TVL over market cap, and you can go instantly see which projects have the most capital locked relative to their size, and which ones are all valuation with very little actual usage behind it. But remember, context matters. A lending protocol like Avi will naturally have a sky-high ratio. A layer on like Solana will be lower, and a project with a declining ratio and declining TVL like Injective, that's where you need to dig deeper. You are the investor. CryptoScores gives you the data, you make the call. So TVL over market cap, it tells you if the money is really where the market says it is. Check it by yourself on CryptoScores.com, and we will see you there in the next one.